Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's just see where the opening is. 5 points higher right now on the Nifty, 10,960, 10,958, 10,960. So the equilibrium on the Nifty is at yesterday's close. Though the Bank Nifty is a bit soft, and that's because of HDFC Bank. So the Bank Nifty is open about 70 points lower right now. 26,724 is what we have. The Sensex is about 18 points in the green. The Nifty has slipped into the red. In fact, as we speak, 10,951 is what we have. Oil marketing companies are down today. A bit of a bounce in crude. Rupee has been under pressure. So HPCL, BPCL, IOC are your top losers. Vedanta is down about 1%. HDFC is down about 0.5%. Titan is down about 0.5%. Yes Bank down about 1%. So most of these stocks are down. There's been, of course, a bit of a support for the market from Reliance. That's a new all-time high for Reliance, 1% higher on the stock. 1116 is what you have. Hindalco is recovering some of the lost ground from yesterday, so 2% higher on Hindalco. Cipla is up a bit, but really nothing kind of opening for the market because it's being balanced by Reliance on the one hand and HDFC Twins on the other hand. Sonia, what about midcaps?
Well, the midcaps are falling, quite characteristic to what we've seen over the last many days, right? Down 50 points on the midcap index. The market breadth has opened weak, 620 stocks on the declining side. A lot of non-index large caps are coming under pressure, whether it's Ajanta Pharma, SRF, Hexaware, Minda Industries, IRB Infra, Dilip Buildcon. All these stocks are down anywhere between 2 to 4% and volumes are definitely piling up there. You have your usual suspects under pressure as well. So you have a 1% beverages that's down 5%, Ruchi Soya, PC Jewelers, Alok Industries all under pressure. Syntex Industries as well is down about 2% or so. And enough about the losers. Talking about the gaining side, Mindtree and Ashok Leyland are playing for a bit of a comeback. So Ashok Leyland is up 1.5%. Mindtree, there was nothing wrong with those numbers, up almost 1% this morning. RBL Bank is playing for some more gains, been one of the strongest stocks this year, up about 1%. And Jain Irrigation on that order win is up almost about 1% or so. So that's pretty much the list of gainers. We do have some stocks hitting new highs as well in this market, which is HEG from the mid caps and Reliance Industries from the large caps. A couple of these smaller result reactions include the likes of Sagar Cements, etc. on the downside. So keep an eye out on that. And maybe, names like Bata, there could be some move in L&T Finance ahead of numbers. A lot of non-index large caps coming out with their numbers today. The rupee, by the way, has hit a record low once again of 69.12. But more pressure coming in yet in the mid-caps, Reema.
Yes, absolutely. So the mid-cap index is now down close to about 0.5%. For the week up until now, the mid-cap index is now down close to about 2.5–3%. The Nifty Junior has fallen 3% so far this week. So severely underperforming the frontline pack. Some more stocks which you should have on your radar. You've got an Alembic Pharma, where the company has got an EIR for its API facility at Kakinada. So Alembic Pharma is in the green. Let's pull up ABB. The company reported a fairly decent set of earnings. The profit growth was close to about 36%. So ABB could be higher in trade. In terms of earnings, you were talking about the big earnings to watch today, at least in the non-Nifty variety. CEAT is moving up ahead of that, so that's higher by nearly 1%. And PC Jewelers continues to, get hit very hard. So the rout continues in PC Jewelers. It's now down close to about 40% plus this entire week, while Berhampur Chini too comes in for pressure. But just keep your eye out on the rupee. The rupee is at a fresh record low of 69.12. The previous low on the rupee was 69.1, hit on the 28th of June. But that time there was some RBI intervention and it managed to close, above that 69 mark. But once again, it's weakened quite severely. And this is despite some dollar, weakness coming through overnight. Anuj, the Nifty and the Sensex are flat, but you would say not bad compared to the rest of the Asian markets.
Yeah, I think again the mid-caps are having a bit of a problem, Reema. So 1:2 on advanced decline, and the usual suspects are down quite a bit. So that I think is an issue. Ashwani, your thoughts on market opening? The indices are quite okay, but the mid-caps are under pressure.
See, what you have not discussed is the rupee, which is made a fresh low. So IT index seems to be outperforming early in the morning. Plus, we hit 10,940, 950 on the banks. We got our 100-point dip. So right now, you should be getting long on IT and banks. Don't worry about the mid cap. A lot of players which came down because of results, Kotak, etc. They are moving back sharply. So I think today is going to be a up day because of 3 down days we had consistently, and today possibly there are a few shorts trapped. So as the day goes by, both Nifty, IT, Bank Nifty, everything should move higher. Possibly 11,000, 11,020 is a fairly decent target.
Okay, I just want to point out one stock. SRF is again showing downtick. So that one is down about 2%. That's been one of the weaker stocks in the broader market. So that one's down about 2%. Mitesh, your thoughts on market opening?
So I think very quiet. You know, I don't think I'll be possibly looking at a trade right now. I think it's hardly any kind of movement. 5 points here and there on the Nifty, but we are close to the lower end of the range, so we are watching that closely. In case we get a reversal signal, then a long trade. But I have slightly more bias towards the possibility of a breakdown today happening. If not today, maybe tomorrow. But 10,940 once it gives away, that'll be more comfortable to go short over there.
Okay, so the possibility of a breakdown, for now it doesn't seem so. Well, of course, the dichotomy between large caps and mid caps continues. So the large caps are being held up. The headline index is being held up by Infosys, Reliance, ICICI Bank, the 3 bigwigs. But the mid caps continue to fall down about 0.3%. Ashwini, what's the big call for the day?
I think Bank Nifty you should go long, given that it opened lower and is now sharply reversed. Also, IT will, get back a lot of its downside which happened yesterday. So today, I think both legs should perform because the rupee remains weak, and IT has a few shorts built in from yesterday.
Okay, Mindtree in fact is having a big pullback. So 3% higher is what you have on Mindtree. Ashwini, thoughts here on the stock?
See, Mindtree just in one day reached, closer to its support. So today could be a good day where shorts could be covered on Mindtree. Even Infosys looks very good because that's had a fairly sharp downside. So today is a day of reversal on IT stocks.
Okay, in fact, in the day of reversals or in the list of reversals, Mindtree has Ashok Leyland for company. That one is up more than 2% right now. And a couple of other stocks, ABB India, it's had a very tough year so far. But after a good set of numbers, I think the street likes that. So the stock is now up about 1.5%. Let's thank our technical guests for joining us and taking us through the market opening. We'll touch base with you once again later. There's a big call coming in from Robert Buckland of Citi. He says that they are cutting the projected returns for global equities. Citi thinks that this global bull market is not yet finished, but progress is likely to be more difficult. Buckland adds that they would still buy the dips, but no longer chase the rallies.
Okay, well, as Sonia pointed out, clearly there is some buying which is returning to Ashok Leyland. So that's a stock where you've seen some bit of bounce. Let's see if that sustains. But the market is also moving on from yesterday's low. It's recovering. And in fact, even the mid-cap index is almost about to turn in the green. So interesting right now. Let's invite our market master for the day, Saurabh Mukherjee, then is with us. Saurabh, hi, good morning.
Morning.
Good to have you on the show. So Sensex at all-time high, but a lot of people say that it's a bear market.
Yeah.
Interesting dichotomy right now.
I think it was long time coming, this the divergence we've had in India between a runaway bull market in the last 5 years, but the lack of fundamental support from earnings. I think at some stage that there was bound to be a pullback. Interestingly, in small and mid caps, we didn't quite have a quality focus in the rally. So if you look at last couple of years, all sorts of wretched small and mid caps rallied where there was simply no earnings support there. The PE multiple went through the roof without any EPS appreciation. So justified pullback there. But I think the key driver, Anuj, what we've seen this year, and I think we'll see for the rest of the year, is liquidity. Liquidity, not just globally, liquidity in India is getting tighter. You can see various types of interest rates, money market rates, 10-year bond yields. We've hardened on all fronts. I think there's further RBI repo rate hikes to come. And as we keep consuming more and our investment cycle doesn't turn, the delta between consumption and investment is turning into a current account deficit, which is pumping the currency down, which is pushing the RBI to suck up liquidity further. So if liquidity continues to tighten, I think not just small and mid caps, I think overall market will stay under pressure, but small and mid caps will suffer disproportionately.
Okay, Saurabh, hi, good morning. I thought you were going to start by saying I told you so, because this is one call that you got right? The fact that small and mid-cap stocks are going to fall.
I think it's never a good idea in this profession to talk about one's good calls, because then the other calls also come back. But I think if we look forward, I think more to the point, if we look forward at the situation, we do have an economic recovery in the last 6 months. I mean, especially on the consumption side, especially on rural consumption, we are seeing a turn for the better. But all we are seeing is a normalization of the economy from the sort of trauma it went through on the back of demon and GST. We've normalized the economy. I think 1Q we will see good year-on-year top-line growth numbers. But alongside that top-line growth progress, we're seeing input cost pressures come through, whether it's oil-related costs, commodity-related costs, or finance-related costs. So as you have a situation where input cost pressures come through alongside rising cost of money, smaller companies suffer disproportionately. So there's a fundamental challenge the smaller companies face. They don't have the pricing power to deal with a rising cost environment. I don't think that's going to go away in the rest of this fiscal.
Okay, Saurabh, good morning. So let's talk about the handful of stocks which have helped the Nifty, say a TCS, a Reliance Industry, HDFC Bank, the Bajaj Twins. Any risk to holding these stocks on account of high valuations? Are we now entering a scenario when perhaps portfolio managers want to take out money from the markets, and this is the place where they've made most of their money?
So I think it's very interesting, those stocks you mentioned. I think currency will be a big factor. As I said, if you keep consuming as a country, whether because of low easy availability of credit or because of government stimulus, you keep consuming as a country, but your capex cycle doesn't fire, that necessarily translates into a larger current account deficit or weaker currency. I think we're going to see further weakening of the rupee and export-oriented plays. You mentioned 3 of them, but the broader pharma sector, the broader IT sector, within auto, the export-oriented plays, more generally manufacturing export-oriented plays, I think could have a very good year ahead of us, right? So look at currency as a big driver. The rupee had stayed stable for 5 years, pretty much throughout this bull run. The rupee stayed stable, and as a result, export-oriented plays didn't quite have a good run. Now that the rupee comes under pressure and a long overdue correction takes place there, I think export-oriented plays could have a very good year ahead of us.
Okay, and in fact, I think that was your view the last time we spoke as well.
That's right.
A positive view on export-oriented plays. I'll come back to individual stocks in a bit. Before that, I wanted your views on what's happening across the globe, right? The big headline this morning is Trump criticizing the Fed. I mean, something that we haven't seen in so long. The fear is that this could lead to further tightening by the Fed, more rate hikes, etc. How do you see all of this play out from a global standpoint?
I think if you look at the last 10 years, right, from Lehman, from 1st March 2009 to now, I think the S&P 500 has given something like 17% compounded, which is just astonishing for a developed, the world's largest stock market to give 17% compounded over almost 10 years is an astonishing fact. That clearly there's been a big liquidity element to the global risk on. As the Fed has been indicating for the last couple of years, they're sucking liquidity out of the system there as well. So the tempering of risk appetite globally is on. That's leading to FII pullback from EM, including us. I think we've consistently seen for the last year and a half FII pullback from the Indian market. What was helping us was our local liquidity conditions were good till 6 months ago. And due to a mixture of currency weakness and rising inflationary pressures, our local liquidity conditions are also now turning hostile. So if liquidity is off globally and liquidity is off in India, then we have a challenge in multiple fronts. But as I said, just because the overall stock market is under pressure doesn't mean you can't make money. Both export-oriented plays where there's a long overdue recovery, I think, in the pipeline. IT has already played a big part in that, but I think pharma and more generally other manufacturing export-oriented plays will benefit. But also rural-oriented plays, right? Government spending on rural election times are great news for rural India. So you got big pockets in the stock market, rural export-oriented plays where you could look to and say, where do I do some sensible stock picking, buy high-quality companies and benefit from the sort of more tempered aggression in the market.
Okay. Uncomfortable question for a lot of people. How similar is this move to the move that we had in 2009 ahead of elections? There also we had seen almost similar move. But those who bought in that sort of correction then had a big move, of course, post the election. In terms of uncertainty for the market from political point of view, you reckon there's more to go?
I think it's a good analogy to draw. I mean, if you look back at the pre-election budget in 2009.
Yes.
I think we're in a very similar situation where the government spends heavily on rural India. I think NREG, that's right, NREG then, and now you've got a variety of farm loan waivers, MSP hikes. If you spend heavily on rural India, you juice up demand big time, right? And you juice up inflation. That combination is good for a certain set of stocks, export-oriented stocks and rural stocks, but overall, it pumps up interest rates and it hits lenders. So if you look at the market, I would say the bull areas we just discussed, but the big bear area I would focus on is not so much small and mid cap. Small and mid cap, I think we've discussed it pretty extensively. I think the big area I would focus on is lenders. If you have a rising interest rate climate and drying up liquidity, that 40% of our market, which is lenders, will come under pressure. And when you see a credible, high-quality bank like Kotak reporting higher SME provisioning, I think that should be a big canary in the coal mine for anybody out there who's invested heavily in private sector banks and NBFCs. SME loan losses perking up on the back of rising interest rates is a classic sign that you've got more pain coming on the NPA front for private sector lenders as well.
So private banks may have topped out, and usually conventional wisdom would tell us, or the performance in the last 5 months would tell us, 5 years would tell us, any dip in the private sector banks, any correction should be a buying opportunity.
Yeah, I would. So if I had to sort of look at the private sector lending space, I think wherever you have lenders who are heavily dependent on borrowing from the wholesale market, whether they be private banks or NBFCs, whether they're borrowing in the CP market or the CD market, lenders who are heavily dependent on borrowing in the wholesale market and are trading at rich multiples, I think there's a natural chance for pressure there, because you've got rising cost of your raw material, cost of money, you've got NPAs potentially perking up, and you're trading at a very rich multiple. And if you look at financials as a percentage of the Nifty, it was 40% in January, which is unbelievable. It's down to, I think, 38 now. But even then, I think financials as a percentage of the Nifty is higher than any sector has ever been in the history of the Indian market.
Okay. Well, I just have to ask you about Ashok Leyland, because it's been in the news for the last many days. And this was one stock that you had identified well before a lot of people. What do you do when the fundamentals are good, but suddenly there's a bolt from the blue in terms of regulation?
So look, I think it's a well-run company. I think Vinod Dasari's made a world of difference to this company. He's refurbished the management team, brought down working capital cycle, brought down costs. Even if you look at the latest annual report, it's a really high-quality company. I know there's a great deal of uncertainty around this new regulation on trucks bearing 25% more load, but I think given the quality of this franchise and given that management itself is, so you can see through their equity buying, through insider equity buying, there's a great deal of commitment on the management's part to continue running this company well. So there's no easy ways to call stocks in the short run. But if you had to look at the auto sector and say CVs are a natural play on a reasonably healthy economy, I think Ashok Leyland at these valuations looks to me to be quite mouth-watering.
What about oil marketing companies, Saurabh?
I think there you're basically making a call on the oil price, and I'm no expert on it. I mean, I read the same newspapers as everybody else. I really have no view. And in an election year, I can't see the oil marketing companies holding up if oil goes back to 80.
Okay, all right. Saurabh, thanks a lot for joining us, and you have a good weekend. We'll speak again soon. Well, that's the word coming in from Saurabh Mukherjee, talking about a lot of stocks, a lot of sectors, and of course the market on the whole. But the big talking point really is the rupee. It made a fresh low today. It's made a bit of a recovery right now, but there was a fresh low in opening trade. Venkat Nageshwar Chalsani, the Deputy Managing Director, Global Markets at SBI, joins on the phone line to talk about that. Venkat, thanks so much for joining us. If you can just start by telling us what your own view is on the way the rupee would shape up, because there are clearly many headwinds. Do you expect further pressure?
Yeah, good morning. The major issue that we are looking at is the global trade war that is happening. And but one of the positives over that is that it's likely to reduce the commodity prices, in turn the oil prices, which is going to be a positive for the Indian market. And therefore, I'm not overtly worried about the way the rupee is depreciated now.
Okay, but what would be your medium-term call on the rupee? Do you see it breaking even that 70 mark?
As I said the day before yesterday, the rupee is likely. I mean, there can be temporarily, there is a possibility of rupee touching 70, but overall, I mean, barring the global crisis, domestically, I'm not looking at any worry. And RBI has enough ammunition to take care if there is going to be too much pressure on the rupee.
All right, Venkat, we leave it there. Thanks a lot for that quick take. By the way, I just want to point out the stock that's weakening a lot right now is Vedanta. In fact, that's the third top loser right now. Just pull out the intraday chart of Vedanta. I think this is a report that the income tax department will be selling now the 18 crore shares of Kane Energy, which is now in Vedanta, for about 2,700 crores. So that supply overhang could be an issue. That's why you're seeing this kind of move on Vedanta. I mean, 18 crore shares were transferred, so now till now 6 crore shares have been sold, but now the balance 12 crore shares will be sold despite the protest from Kane Energy, and that supply pressure, I think, could be the reason that you're seeing this bit of decline in Kane, down about 3.5%.
By the way, the midcap index has also recovered. It was down close to about 0.5%, a little more than that, and now it's pretty much flattened out. And it's courtesy the strength in the midcap IT names. So we spoke about Mindtree and the recovery from yesterday's big fall, but not just that. An Emphasis is higher by 2.5%. So Hexaware is showing you some gains. So that's up close to about 1%. Adani Power continues with its run. Now it's up 16-17% so far this week. M&M Financial, Jubilant Foodworks. So these are a couple of the stocks aiding the recovery in the mid-cap space, and now it's just got back into the green as well.
Okay, so looking good. Obviously, all indices are absolutely flat right now. But yes, there is a bit of a intraday recovery, as Rima said. Let's go across to the next management who joins in. Sterlite Tech has been trending higher post-earnings, which were announced yesterday. Their margin profile has been improving over the last 2 quarters, and the order book is also at an all-time high. Anupam Jindal, the CFO of Sterlite Technologies, joins us now to talk about that. Anupam, hi, good morning, and thanks for joining us. Can you tell us a little bit about what the order visibility for Sterlite Tech looks like? This time, your order book has hit an all-time high of 6,000 crores. How is the demand situation, and what can we expect through the course of the year?
Yeah, good morning. Yeah, so this entire thing of data growth which is happening, and as you said, we are sitting on all-time high order book. So essentially the 5G, fiber to the last mile, and the entire thing about national broadband, which is happening all across the country and the world, is driving the fiber growth, and that is driving the overall industry. Sterlite, being a global player, again is participating in that high growth industry. With our unique positioning in that, we are able to have a very good traction with our customers, particularly in Europe and China, and riding on that in India, and that is driving our order book. So from 3,100 crore order book as at June 17, we are able to increase it to about 6,000 crore as on 30th June 2018. So that is something which is overall driving, and this is driving the performance for the quarter as well.
Hi, Anupam. Good morning. You have indicated that the company is expediting its PAT guidance of achieving $100 million by 2020. So that is going to perhaps come sooner than what you had earlier anticipated. What will this mean in terms of margins? Because even from FY16 to FY18, you managed to double your profits. But that was accompanied by a near 400 basis points improvement in your margins. For FY18, your margins were at close to 24-25%. What is the expected improvement in margins as the company achieves this $100 million mark by way of profitability by FY20?
Yeah, so first thing, in terms of the guidance, strategic guidance, we had given that achieving 100 million by FY20, that was given about a year back. And today, when we see the visibility based on these kind of order book and a lot of other things which are happening, and Sterlite is well positioned, we see that 100 million mark run rate wise being achieved earlier than maybe by March 19. So that's the thing which we are getting more confident of, and we'll look at that maybe we will surpass this $100 million kind of a PAT by FY20. So that's one. And in terms of the margin which you talked about, yes, from FY16 to FY18, the margin has got significantly improved. Partially coming in from the overall operating leverage we have. One of our facility in optical fiber was underutilized significantly, and we have seen that utilization doubling up over last 2 years. And currently we are operating that at about 90% from 40-45% we were operating at last 2 years. So that's something which is really helped. Plus the overall operating efficiency which we are having in our fiber plant is also driving it up. Overall, our services business and software business are also getting far better stabilized than maybe when we started 4 years back. So all of these are driving the overall margin improvement. As far as the future outlook is concerned, I think I would still say that 24-25 is something which we can see in the near future.
No expansion in margins over the medium term.
Yeah, yeah.
Okay, 24-25% is what you're expecting to see in the near term in terms of margins. Tell us a little more about the Metallurgica acquisition. What will it bring to the table over the next few quarters? So far, Sterlite plus Metallurgica revenues stand at close to 3,600 crores at the end of last year. What can we expect over the next 2 years? And any more acquisitions on the cards to reach this $100 million profit figure by FY20?
Yeah, so in terms of this Metallurgica, it's a Europe-based company, primarily into communication cable, both fiber and a small bit of copper cable also. So that will be a strategic addition, and since Europe is a large market where we are having 27% of sales coming in from Europe market, so this will become a strategic hub for serving those customers from there, and also brings in a new set of customers where we didn't have access to. So in terms of the revenue growth, it will have its own revenue growth, like 47 million euro of last year, which it delivered. We are expecting that it will definitely go. We don't have any number right now, but in terms of the capacity utilization, it was at 60% on fiber side, primarily because it didn't have access to fiber. We coming in, I think that will be an immediate opportunity for us. We are looking at a substantial growth in line with what we see in our company, because with the Sterlite coming in, it will be able to serve the local market far better through this acquisition, and it will definitely add to revenue as well as bottom line, and we have communicated that this will be immediately accretive to the EPS of the company. And it's not necessarily that acquisition is the addition to the 100 million. We are not doing acquisition to achieve $100 million, because organically I think we will be able to achieve $100 million on our own. In terms of the further pipeline, I think that we continue to looking at our strategic need on the product side as well as on the systems, system integration and software business side.
In fact, on that subject, can you break up your order book of 6,034 crore into products as well as software services?
Yeah, so essentially the 6,000 crore is consisting of 5,000 of order book from products, which again is coming in largely from Europe, China market, where we have access to large customers, both on digital service providers and telecom service. And then we have some part of the orders in telecom operators as well. The system and system integration and software business is about 1,000 crore. Within that, roughly about 250 crore on software side, 750 crore on system integration side.
Okay, all right. Thanks a lot for joining us. That's Sterlite Technologies. Actually, the stock has picked up substantially now. It's up almost about 6.5% on the back of these numbers. I think the street liked the commentary from the management. And of course, the margin profile, the operational performance has also improved quite a bit. Let's take a short break on that note. Up next, the Mindtree stock has recovered today after a big fall it saw yesterday. Up next, we'll get chatting with